Hi friends, everyone seems to be fond of saying Ola Electric is overvalued, will never be profitable and the bubble is going to burst soon. In this video, let me present you with some facts and figures about the business that Ola Electric is engaged in so that you can make your own conclusion. The current market cap of Ola Electric is around 53,000 crores. The projected annual revenue for the firm is about 1718 into 4 quarters, which is roughly 7,000 crores, based on the fact that their quarter 1 revenue for fiscal year 2025 was around 1718 crores. This implies the price to sales ratio is around 53,000 divided by 7,000, which is 7.5, which is for high growth businesses like Ola Electric is actually quite good. However, the concern perhaps is more on the profitability or earnings side. Lots of us believe that Bhavish Agrawal has never run a profitable business so far, and hence can he deliver for Ola Electric? Let's try to analyze this, and also we will check some facts presented by Bhavish himself on the profitability of Ola Electric. Firstly, disclaimer, I have invested substantial amount of my savings in Ola Electric, and in this video I'll try to present to you the thinking that went behind this investment. Don't take this as a stock recommendation. I would urge you to do your own research and then make your own decision. For Ola valuation to be reasonable, the PE ratio should be around 50. Although this number is certainly low for a startup like Ola with a high growth trajectory, we will try to stick to a forward PE of 50 to keep our investments safe. If Ola Electric can deliver 53,000 divided by 50, which is approximately 1,000 crores of earnings, it would justify their current valuation. The question is, can Ola really deliver a profit of 1,000 crores in future? Before we get into profits, let us estimate the revenue that the company can deliver in future so that it can benefit from economies of scale and deliver profits from their current manufacturing setup and capacity. The higher the revenue from the current investments made by the company, the greater the chances of delivering profits for Ola. To calculate the possible future revenue for the firm, let me break the revenue generation into 3 parts. 1. Revenue from the scooters, which is their existing business where they are the market leader. 2. Revenue from bikes, which they are delivering in about 5 months' time from now and for which the pre-orders are being taken right now. And lastly, we will look at possible revenue from the lithium-ion cell manufacturing business of Ola Electric. Let me start with estimated revenue from the Ola scooters. The revenue for the automotive business for quarter 1 fiscal year 2025 was 1713 crores with 1,25,000 scooters shipped, and hence the annual revenue for fiscal year 2025 can be expected to be around 1,713 into 4, which is 6,852 crores or around 7,000 crores. So this is the current revenue. Let us find out what the future revenue can be from scooters for Ola. Here we are taking a long-term view of our investment and trying to find out what revenue could be in 2 to 3 years down the line, or maybe even 5 years from now. It has been stressed by many analysts that Ola Electric is not a short-term investment. Every year about 55 lakh scooters are sold in India. In fiscal year 2024, out of the total number of scooters sold, 21% were EVs. Hence about 55 lakh into 0.21, which is 11 lakh EV scooters were sold last year, with Ola selling about 3.3 lakhs of these. The share of EVs in the scooters sold is increasing every year, and in about 9 key states including Maharashtra, Karnataka and Uttar Pradesh, the percentage of EVs is already touching 30%. The expert opinion is that at least for the scooters, the shift to EVs is inevitable. Sometime in near future, most probably within the next decade or so, almost all scooters sold will be EVs. This is inevitable due to the fact that the starting price of EV scooters is slowly getting cheaper than the internal combustion engine scooters or the ICE scooters here in India. Ola S1X is already selling for a low price of 88,000, which is the on-road price for Bengaluru. In coming years, the price and total cost of ownership gap between the EVs and ICE scooters is going to get even bigger. While falling battery prices are making EVs cheaper, the cost of ICE vehicles is going up every year due to the increasing manufacturing costs to help comply with the new emission norms and because of higher fuel costs. As Bhavish would like to put it, The EVs are on a deflationary trend while ICE vehicles are on an inflationary trend. Hence, by 2026-27, I wouldn't be surprised if 50% of the scooters sold are EVs, and by 2030, this number can get as high as 80%. This trend is already seen in China, where EVs are outselling ICE vehicles in both two-wheeler and four-wheeler categories, and it's only a matter of time before this happens here in India as well. Experts predict about 80% of the bikes sold here in India will be EVs in future, and almost 100% of the scooters will be EVs. Given these facts, we shouldn't be surprised if by 2026 the number of EV scooters sold in India goes up to 25 lakhs per year from the current number of 11 lakhs. Ola, being the market leader with about 30% market share, can be expected to sell about 7 to 8 lakh scooters in 2026-27. Given the fact that selling 1.25 lakh scooters in Q1 of fiscal year 2025 fetched 1,718 crores for Ola, we can expect a revenue of around 10,000 crores per year for Ola Electric in the next 2 to 3 years from their scooters business. Next, let us try to estimate the amount of revenue Ola would be able to generate from their bikes or the motorcycles. The market for bikes is much bigger than that for scooters in India. Each year, about 130 lakh motorcycles are sold, while the number of scooters sold annually is just 55 lakhs. At present, only about 1% of the bikes sold are EVs, and unlike scooters, there is no well-known brand selling EV bikes here in India yet. Hence, with Ola entering the bike segment in next 5 months, they will certainly have the first mover advantage. Again, due to aggressive pricing and reduced total cost of ownership combined with Ola Electric brand exposure, we can expect Ola to sell about 5 lakh bikes per year by 2026-27. This is less than 4% of the 130 lakh sales figure for the bikes. It also takes into account the fact that Ola has literally no competition in the EV bike segment at present. Selling 5 lakh motorcycles should fetch an additional revenue of 7,000 crores for Ola, assuming similar pricing as scooters for bikes, as announced by Bhavish in the launch event recently. Hence, my estimate is that Ola Electric can post about 17,000 crores of revenue in the automotive segment in the next 2 to 3 years by selling about 12 to 13 lakh scooters and bikes. This brings the forward price to sales ratio to 53,000 divided by 17,000, which is 3.1, which is pretty low for a EV manufacturer of the size of Ola Electric. Please note that the current capacity of their manufacturing plant is 10 lakh or 1 million EVs per year. As a result, Ola will need to upgrade their facility when they expect sales to exceed this number. Given their track record, I expect them to quickly enhance their capacity to meet any increase in demand for their vehicles. Now let's analyze the potential revenue from Ola Electric's lithium-ion cell manufacturing business. The Gigafactory is currently on a trial production run, and Ola expects to start production at the start of calendar year 2025 or in Q4 of fiscal year 2025. They have reached 1.4 gigawatt hour of capacity already and expect to reach a capacity of about 5 gigawatt hour next year. 5 gigawatt hour capacity can serve up to 1.5 million EV two-wheelers, as per the data provided by the Ola Electric management. From April 2025, scooters and bikes shipped by Ola will have their battery manufactured in-house, saving significant production costs for the firm. Ola management has said they plan to go big on generating revenue from their cell manufacturing. Their aim is not just to meet their internal requirements for the EV battery installed on their bikes and scooters, but also to market lithium-ion cells to external customers. Assuming a price of $150 per kilowatt hour, a 1 kilowatt hour of cell capacity can fetch about 12,000 rupees of revenue. This equates to about 6,000 crores revenue for 5 gigawatt hour of cell capacity manufactured in a year. While substantial capacity will be utilized internally by Ola for its EVs, any leftover capacity will be sold to outside customers, possibly for energy storage, as revealed by Bhavish himself. Every 1 gigawatt hour of cell capacity produced should fetch the firm about 1,200 crores revenue, or if used internally, it should save 1,200 crores for the firm. It is hard to predict the kind of revenue that Ola Electric can earn from its cell manufacturing business, since we do not know how aggressively they will pursue customers for this business. No company in India has ventured into this area at scale yet. The opportunity is huge though. The global lithium-ion battery market is projected to reach $300 billion or 24 lakh crores by 2030. Established cell manufacturing giants in China and South Korea are already worth tens of billions. For example, Cattle earns revenue of more than 4 lakh crores every year. BYD, which operates in both automotive and battery sectors, earns a total of 7 lakh crores. LG Energy Solution, the third largest battery manufacturer, earns about 2 lakh crores of revenue with about rupees 10,300 crores of net profit last year. Samsung SDI reported 1,43,000 crores of revenue last year with 13,000 crores of net profit. As Ola Electric expands into this market, it will be interesting to watch how their business evolves. There is a strong domestic market for lithium cells here in India as well. At present, the cells are all imported from China and South Korea. With the impending EV revolution, along with the present focus of the government being renewable energy with a target of 500 gigawatts of energy capacity by 2030, this demand for cells used in EV batteries and energy storage in India is set to grow exponentially. Ola Electric plans to expand its cell manufacturing capacity to 20 gigawatt hour in the next 4 to 5 years. As I mentioned earlier, they already have a capacity of 1.4 gigawatt hour, which is sufficient to meet their current production of 4 to 5 lakh EVs. To be conservative, in the next 2 to 3 years, we can expect Ola Electric to sell about 3 gigawatt hour of cells, potentially generating about 3,600 crores of revenue from its cell manufacturing business. Hence, to sum it all up, it is reasonable to expect about 20,000 crores of revenue from Ola Electric in the next 2 to 3 years. This is from the estimate of about 10,000 crores from the scooters, 7,000 crores from the bikes, and about 3,000 crores from the cells business. If the present momentum and focus are maintained for the next 5 to 6 years, we can even expect this number to reach nearly 50,000 crores by 2030. This is mainly for 3 reasons. 1. More than 80% of the scooters sold in India will be EVs by then. 2. EV bike share should reach 50% if the manufacturers introduce compelling models that effectively replace the ICE bikes. And the third reason for the 50,000 crores estimate is the cell manufacturing business matures with Ola increasing its production capacity to 20 gigawatt hour, generating significant demand both domestically and internationally. Okay, all this revenue is fine, but what about profitability? Bhavish Agrawal is known for starting big businesses that have not seen profitability so far. However, it should be noted that none of them went public except for Ola Electric, and he has been repeatedly stressing that they are working hard to turn this into a profitable business. Being a publicly listed company implies constant scrutiny of financials of the company and pressure to deliver profits. Bhavish feels profitability is near for Ola Electric due to the following reasons. First, EBITDA margin for the firm has improved continuously for the past 3 years, starting from minus 43% in fiscal year 2023 to minus 19% in fiscal year 2024 to minus 7% in the quarter 1 of fiscal year 2025. In fact, the automotive business almost turned EBITDA positive in quarter 1 of fiscal year 2025 with an EBITDA margin of minus 1%. It is expected that with increasing sales of Ola's EV two-wheelers in coming years, as estimated earlier by us, the margins will only improve with time due to economies of scale. Large parts of labor, assets, manufacturing setup and R&D costs remain fixed with increasing capacity, reducing costs of producing a vehicle. Second reason why Ola Electric could become profitable in near future. Ola management has repeatedly said that when they switch to the in-house cell and battery in quarter 1 of fiscal year 2026, that is early next year, the firm will save about 8 to 10% of the cost of production since they retain within the company the margin paid presently to the cell manufacturers. Third reason for expecting profitability in near future. Reduced prices of raw materials for cell manufacturing and improved chemistry of cells like switching to LFP batteries can significantly reduce the cost of vehicle and make EV two-wheelers profitable. The battery prices have come down from $1,000 per kilowatt hour in 2012 to nearly $100 per kilowatt hour in 2024, a 90% reduction. Fourth reason why Ola management believes they are nearing profitability. Move to the Ola Electric's Generation 3 manufacturing platform for scooters as well as bikes early next year will further save about 15 to 20% of the cost, according to Bhavish. The highlight of the Generation 3 platform is its integration of the motor, the battery and the electronics into a single seamless unit. This integrated platform will be common across all the scooters and bikes to be manufactured by the firm next year, saving manufacturing time and costs. However, do note here that any reversal of incentives and subsidies provided by the government under the PLI scheme or the FAME or EMPS scheme to Ola can affect the margin significantly, possibly by about 12 to 14% as per the current estimates provided by the Ola management. However, reversal of subsidies is unlikely in the near future because of two reasons. One, EV adoption in India is still in early stages, and subsidies like FAME or EMPS are crucial for driving growth of EVs. Two, cell manufacturing is still in its infancy, requiring government support through the PLI scheme due to the substantial investments involved. Lastly, I want to bring an additional point about the potentially huge market opportunity for EV scooters and bikes manufactured by Ola outside of India. India is currently one of the largest exporters of two-wheelers in the world. Bajaj Auto exports 50% of its production, TVS about 26 to 30%, Royal Enfield about 10 to 15%, and Hero MotoCorp about 5 to 10% of the vehicles manufactured. Indian two-wheeler manufacturers export their products to a wide range of regions, with Africa, Latin America, South Asia, and Southeast Asia being the primary markets. The global EV two-wheeler market is 105 billion US dollars or rupees 8.71 lakh crores in 2024, and it is poised to grow at a CAGR of 9.95% annually to reach 186 billion US dollars or rupees 15 lakh crores by 2030. With time, when the domestic market reaches saturation, companies like Ather and Ola can expand into global markets. The reason why I say this is EV scooters manufactured here in India are perhaps the most advanced EV two-wheelers anywhere in the world. Even though China manufactures the largest number of EVs and Chinese EV two-wheelers have a presence in more than 100 countries across the world, their products struggle to compete with Indian two-wheeler EVs in terms of performance, range, technology, and surprisingly cost as well. This can be confirmed by having a quick glance at the products of Yadia from China on their website. Yadia is the largest EV two-wheeler manufacturer in the world. Yadia sold more than 16.5 million units last year. That is 40 times the 4 lakh units shipped by Ola. And their two-wheelers are being exported to 80 countries, including USA, Germany, the UK, France, Japan, Korea, and others. And they have been making electric scooters since 2012. Yet despite their scale and experience, two-wheeler EVs of Yadia lag behind those of Ola and Ather in terms of performance, design, software, features, and costs. Indian EV two-wheeler manufacturers Ola and Ather are spending a lot more money on R&D than their global counterparts. This positions them well for their future growth. Hence, once the domestic demands are met, companies like Ola and Ather can turn their focus to international markets to expand their business. This can potentially increase their revenue exponentially, and their margins can improve substantially as well. Considering these facts and projections, where revenues are expected to touch several times higher than the current 7,000 crores of Ola Electric, achieving a 1,000 crores profit to justify a forward PE of 50 doesn't seem overly challenging for Ola Electric. If Ola Electric is going to reach a revenue of 20,000, 30,000 or even 50,000 crores, expecting a revenue of 1,000 crores is quite reasonable. Ola's management has a strong opportunity to deliver on their promise if they remain committed to this business and continue investing their effort and expertise to ensure its long-term success. By the way, if the profitability does occur, I don't anticipate the stock to remain even remotely near the current price. Until this whole EV thing plays out, it's hard to imagine Ola's stock PE to remain anywhere close to 50 or even 100 for that matter. Just look at the Zomato stock. When the company turned profitable, the stock price zoomed by 300, 400% and continues to rise. Zomato has tough competition in e-commerce, challenges on the margin side, heavy investments to be made, yet market refuses to relent. Hence, we shouldn't be surprised if Ola Electric turns out to be a multi-bagger in the long term. Given this scenario, I went ahead and invested in Ola Electric and remain bullish about their long-term prospects to generate wealth for their investors. Please do not take this as a stock recommendation and do your own research before investing. In future videos, I'll talk more about potential opportunities, risks, and challenges of investing in Ola Electric or other new energy businesses. So stay subscribed if you want to be notified of my new videos. Thanks for watching and have a great day.